Everyone wants to take their business, their skills, to the next level. Small and mid-sized business owners have exceptional insight into how to do this. They endure and thrive because they find ways to overcome the challenges that come their way, and they can teach us valuable lessons to apply to our own companies and lives. Stephen Nooner, founder and owner of Alkali, a company with a unique process that helps businesses more effectively buy and manage their insurance programs. And Bob Gibbons, builder of Riata Commercial Realty, a real estate advisor and tenant advocate, are two prominent Metroplex businessmen who, along with their weekly guests, will ask their and your probing questions, finding impactful solutions that will help you reach for the next level. Here are your hosts, Stephen Nooner and Bob Gibbons.
Welcome to The Next Level, Conversations that Propel Business. I'm your host, Stephen Nooner.
And this is Bob Gibbons, and we're here today with an interesting guest by the name of Charlie Tian. Charlie is I don't know what to call you actually, Charlie. A guru? You think we ought to call you guru? Let's call him a guru for the moment, because Charlie actually has a PhD in physics and is a research scientist basically, but he got interested in investing years ago and started researching the guys that he thought were the smartest guys in the room when it came to investing, like Warren Buffett and others.
Bob Gibbons wasn't on that list.
Bob Gibbons wasn't even in the universe. And he turned that into a business called GuruFocus. And you can learn more about that at GuruFocus.com. And we're excited you're here, Charlie. Welcome.
Welcome.
Thank you very much, Bob and Stephen. I used to be a physicist, as you all know. I studied physics for many years. I was extremely interested in physics. Before I became an investor, I was buying technology stocks because of my physics background. I thought that I understood how fiber optics works, how technology works. So in the peak of tech bubble, 1999, 2000, I bought technology stocks, fiber optic stocks.
Oh, how'd that go for you?
It went very well, actually. Initially, I bought stocks with Corning. It tripled in 3 months. Then I bought more fiber optic stocks, Uplinks, GuruFocus, new companies that time. Then the tech bubble burst, and I lost 90-something% of my money on that.
Oh, my goodness.
Yeah.
Yeah, that was an unusual time, wasn't it?
That was very unusual, but it gave me a chance to study. Actually, I felt that I'm lucky that I lost money during the tech bubble. Then I started to learn. I started to read. I read Peter Lynch. I read Warren Buffett. By reading Peter Lynch and Warren Buffett and other great value investors, my thoughts on business and investing were completely changed. In 2004, I thought, if I pick stocks, why do I want to start from scratch? Why don't I look at the portfolios of some great investors like Warren Buffett to see what he's buying, he's selling, and then we can go from there. So in that way, the chance of making mistakes will be much smaller. I call it standing on the shoulders of the giants.
Okay. So you went out on your own, made some investments. You've lost quite a bit of money when the tech bubble burst. So you're now just in the kind of the phase, I'm going to emulate the Warren Buffetts of the world and invest like they invest.
That's the basic idea. I started from there. Then gradually I tried to understand why he bought those kind of stocks. We try to understand how Warren Buffett invests. Mm-hmm. And I read all his shareholder letters from the 1950s to this time. Every year it's like 60-some years of partnership letters and shareholder letters. Huh? I watch all the interviews of his and his talks. And that completely changed my life, basically.
Now, whenever you did that, did you also have the context to understand why he was saying what he was saying at the time he was saying it? Because obviously the economy was very different in the 50s, 60s, 70s, et cetera, than it was in the tech bust. So you had to do a lot of other research besides just what he was saying, I assume.
That's definitely true. And Warren Buffett, he's a very good writer. If you read his shareholder letters, he's like talking to you, a conversation. And he also talks about the background of what he's talking about. So in that way, you understand a lot. He's really a very good writer, and I enjoy reading his letters. Actually, I went over his letters again last year. I got totally new understanding from reading the letters again.
How did you find all those? Are they available on the internet?
Yes, all the Warren Buffett shareholder letters are available on their website, berkshirehathaway.com.
Okay. And then the videos, the talks, same thing?
Yeah, the videos, basically, there are lots of classic interviews or his writings over the years you can always find on the internet. Actually, you can also find them on GuruFocus.com. We always link to those kind of interviews and articles.
So you said it changed your life. So what was the big epiphany? What changed?
I was a scientist. I was still working as a scientist in 2004. But then I started GuruFocus.com. I got lots of feedbacks from the users and also suggestions from other investors. Through the process, I learned tremendously. I was still working actually as a scientist at a telecom industry in Richardson. I was still working full-time there. Then the website did extremely well. Gradually, in 2007, I quit my job and started working on GuruFocus.com full-time. Then gradually, I hired some more people. Now I have about 10 people working for me. So it really totally changed my life. Otherwise, I would be still a scientist in the telecom industry.
Well, so let's back up for a second then. So you start doing all this research. Why did you start the website? Did you think that you were starting a website for information that other people would want? Or I thought this was really just for your own investments, and understanding and knowledge.
Initially, I started the website as a hobby. I didn't expect to make money out of it. But after I put it online initially we had the basic information like Warren Buffett's portfolio and other great value investors' portfolio. We put it on it. Then we try to find what the stocks they own in common. Also the stocks they bought, the price went down, so we can buy at a lower price than they have bought. Initially we had this kind of ideas. Then we put it on the website. I put it on the website and got lots of feedbacks from the users. And the readers told us that, oh, this is great because we save them a lot of time on the research. We also can link to all the shareholder letters, interviews, articles of those great investors, put them together on GuruFocus.com. Then it's very easy for readers to gain access to all this information. So in this way, they save lots of time on their research too. So I got lots of positive feedbacks. Some people even donate money to me, so they said continue to do it. It's great. So I was very excited. I worked day and night, didn't sleep much in the years of starting 2006, 2007. Didn't sleep much. I worked really hard. But it has been a very, very exciting journey.
So then how did you turn that into actually a profit basis? I mean, what was the key inflection point when you suddenly said, hey, there's a business here?
Yeah, I got people were donating money to me, and I was making money on the website through advertising. But it wasn't a lot of money in the early years. But then in 2007, I said, why don't I start an online membership from this? People are willing to pay. So in January 2007, I started a membership called Premium Membership. We charged $249 a year. And I thought that if I have 1,000 members, I can make $250,000 off it. If gradually I can get 1,000 members, 1,000 people subscribe. But actually, in the first year, 2007, I got 1,000 people subscribed.
Wow.
Nice.
Congrats.
So $250,000, you're all done.
Yeah, actually, I'm done. I quit my job.
So that's when you decided to.
Yeah, I quit my job.
And so when people are subscribing, what's the value they're receiving? So like what does the premium membership provide?
Initially, we provide the portfolios of the best investors, but then gradually we put a lot of data in because we are value investor. Warren Buffett is the most famous value investors in the world. We're value investors, and we need data to do research. So now GuruFocus provides 30 years of historical financial data and valuation data for every company that's traded in every market of the world. So we cover about 60,000 companies worldwide. From our website, you can find the historical financial data and valuation data and the ranking data for all those companies. Then we also have the screeners we developed over the years for value investors to screen the stocks they want based on the data we have. And then they can also do a back testing because they have certain strategies. With the strategies, they set up the filter, they screen out the stocks. Then they can back test how the stocks did over the past 10, 12 years. In this way, they will get an idea whether this strategy is working or not. But we are long-term investors, so all the numbers, the data they use are based on fundamental long-term data. We don't care very much about daily price moves and technical stuff.
So for a person who's not like an avid investor, what is, I'll raise my hand here. So what does that mean? What is the kind of data that you guys are considering when you're looking at what would be considered a value?
Yeah. As value investors, we invest in long term. So one of the most important thing is the quality of the company. So when we look at the quality of the company, we look at the balance sheet, the growth, and the profitability over long term. So that's one important factor. A second factor is the valuation, how the stock price is traded compared with the value we get. That's called value investing.
And is that basically the PE ratio?
PE ratio is one a small part of it, is a part of it. But when you look at it depends on what kind of companies you are looking for.
Okay.
Yeah.
So whenever you decided to create this this model, subscription model, I notice now you have multiple levels of subscriptions, I should say.
Right.
So there's a free option of some sort, right?
Yes.
So like, is that just a newsletter?
A free option will get 5 years of financial data instead of 30 years. A subscriber will be able to get 30 years of financial and fundamental data, valuation data. Also, if you can subscribe U.S. market only, you can subscribe European market and Asian market. In this way, people pay different prices depending on what kind of market they want to cover. Also, the backtesting tools I was talking about is for a higher level of membership.
And who's buying it right now? I mean, who are your typical subscribers?
We have lots of professional subscribers like financial advisors, analysts from mutual fund companies, or hedge fund companies, hedge fund managers. And also we have lots of individual subscribers, the subscribers who love to learn, love to study, love to do research on companies and stocks.
And I understand you even have some of the gurus that are your subscribers now.
Yeah, we have lots of subscribers who manage more than $1 billion funds.
That's got to be so satisfying right now. All right, we got to take a break.
How does technology and emerging government trends impact value investing? Stick around.
Wow. Be back in a minute.
And now, Confessions of a Recovering Landlord.
This is Bob Gibbons with Riata Commercial Realty, and I am your recovering landlord. After 20 years as a landlord, I now use that experience only for the benefit of companies that lease or buy office buildings and warehouses. Today's confession: knowledge is power. We all negotiate from a position of power and strength, or at least we want to. In any negotiation, the party with the most knowledge probably has the upper hand. And landlords count on this being the case whenever you're negotiating a lease, because most landlords are professional real estate investors and they hire professional leasing agents and property managers. Landlords are in the market every day negotiating leases, while tenants probably only negotiate 1, maybe 2 leases every few years. So tenants feel outgunned. Don't let landlords have all the power. As a former landlord for 20 years, I understand how landlords think and what motivates them. So let me put that knowledge and experience to work on your side of the negotiation. To learn more, contact me at texastenantrep.com. Again, that's texastenantrep.com.
Have you started making plans to take your business to the next level in 2016? Hi, I'm Stephen Nooner, founder and CEO of Alkali. We have a trademark process called the Empowered Advantage that enables CEOs, business owners, and entrepreneurs to more effectively buy and manage their insurance. Before sitting down to make your plans for the new year, here are just a few things to consider. Would you say that you have an actual insurance strategy, one that you can articulate, or have you just purchased a policy here and there over the years? If you have an insurance strategy, was it discussed under the pressure of a renewal deadline or considered earlier in the year to avoid fire drill decision making? If your answer was no to either of these questions, then you may not have the right partner on your team. Visit alkaliservices.com to contact us and take the next step to a bigger and better future.
I'm Zane Conkle with Citracom, and we are a voice over IP provider providing phone services to businesses across the country. I wish I could put Bob and Steve on hold here for a while.
Welcome back to The Next Level, Conversations that Propel Business. We're here with our guest, Charlie Tian. He is the founder and CEO of GuruFocus, and you can find him on the web at GuruFocus.com, and that's G-U-R-U focus.com.
So I threw out in the hook. I just kind of made that up on the fly. But one of the things I've been curious about in the concept of value investing is the impact of political swings. I mean, you have different political ideologies switching out back and forth within government, and then you see a lot of disruption also due to technology. So what are the impacts of that on long-term value investing?
Value investors usually look very long time span, so the short-term political swings usually does not make a difference on our investing decision-making process. We're not very good at predicting the future or predicting the economy, political changes, but we focus on company fundamentals such as their profitability, their balance sheet, their long-term growth, and whether they have a moat which protects the business from competitions. We pay a lot of attention to those kind of factors. We don't look at very much about macro factors.
So whenever a government changes, or Brexit, so when the UK decides they're going to get out of the European Union, I would think that would have a big impact on a lot of companies that are doing business in UK. So is that a factor you just sort of are blind to, you sort of ignore because it has no impact, or because your long-term perspective will go way past that and make that sort of irrelevant?
We actually think lots of those incidents will give us opportunities. We research stocks, we research companies, we get prepared. And when things like that happen, the stock market can move a lot due to short-term impacts. But our long-term focus gives us an advantage there. We can buy the companies we want to buy, but not the price we want to pay. But in those kind of occasions, we may find the price drop and give us opportunities.
So when I went to your website, I was overwhelmed. I mean, there's so much information there, and I was just looking at the free version. I mean, this wasn't even the stuff that the people that paid get. So I mean, it was
spelled INVE.
Yeah, exactly. It was just, there was so much there. So when somebody goes to your website, what is your recommendation on where do they start to figure out what's there and how they can use that to their advantage?
Our website now is the biggest value investing website on the internet. It does require a lot of knowledge for a user to take advantage of the features we have, and they need to learn a lot before they can take advantage of everything we have. But we have a tutorials page where the tutorials, we have done a lot of webinars and videos with and also articles. If you read through those articles, watch the videos and the webinars, you can learn a lot about how to value a company, for instance, how to use the screeners we have, how to invest the way Warren Buffett did over the past 60 years. So we have lots of information. It does take a lot of learning. Our features, value investing itself is not simple. It takes lots of learning, knowledge. That's also actually what I talked in the book I wrote, Invest Like a Guru.
We were going to get to that.
Yeah.
All right. So as long as we're there.
So there's a book.
So yeah, if anybody's looking on at the video, the book is right in front of you. So tell us about the book.
The book is called Invest Like a Guru, How to Generate Higher Returns at a Reduced Risk. Because for investing, to me, it's about learning. I have learned so much over the past 15, 17 years. I feel that learning changed my life. So, and also investing can be learned. If you're willing to learn, willing to read, it can be learned. Investing there's no trick. It's about knowledge and hard work. So you're willing to learn, gain the knowledge, then spend the time, do the hard work to research companies. There's really no trick. If you do well, if you're willing to spend the time, willing to learn, you can do well. Warren Buffett, why he's doing so well? He's a learning machine, just like his partner Charlie Munger said. Warren Buffett is a learning machine. He learned even when he was past 65 years old. Now he's 86, and he's still learning. So everyone can learn value investing.
So what's the key to learning?
To read the best investors. Of course, you can start with my book.
That was a total setup, wasn't it?
Invest Like a Guru. And the reason I wrote this book, actually, is because actually I wrote it for my children. I want them to stay in the right framework for investing, because with investing you can easily go to the wrong direction. You pay attention too much to the short-term movement. You become a trader based on how charts moves. There's lots of ways you can go wrong, but if you read Warren Buffett and read my book, you'll be in the right direction. I wrote the book. I hope that my children will read it so that they will stay in the right framework of investing.
Now, there's a recent news. You only published the book like a month ago or so, and there's already news that it's going to be published in another language.
Yeah, I just got the news from Wiley, the publisher. They told me that a Japanese publisher is going to publish Invest Like a Guru in Japanese.
Oh, that's exciting. Congrats.
Thank you very much.
You can get the Japanese version, Bob, and it'll make about as much sense.
I'll give it to you. You're saying that I'm going to have the same results whether I read it in Japanese or
You did
English?
ask the question, how do you learn? How do you learn?
Well, some people may need that. Okay, so you've talked a lot about Warren Buffett. You just mentioned Charlie Munger. Who are some of your other favorite investors that GuruFocus will follow?
Charlie Munger and Warren Buffett, they're of course the best. And Peter Lynch, he was a former fund manager at Fidelity, had a tremendous track record. And also a fund manager called Donald Yachman. He's based in Austin. His fund called Yachman Fund has been doing tremendously well. And also he had an impact on my investing philosophy, which I also talked about in the book. He's a long-term investor. He tried to focus on companies that are not cyclical, that are consistent with their performances during good time and bad times. And he loves to invest those kind of companies.
So you're building a business. You mentioned earlier you have 10 employees. You're the guru. You're writing books about being the guru. How do you balance being the guru, but also learning what I see is a totally different skill set of building and running and growing a business?
It's actually a very good question. It's because of my background as a physicist. I tend to focus a lot on data, on research, and I enjoy doing those, actually. I just focus on the numbers. But I'm running a business. I have to manage people. I tend to hire the people who are more like me. So they focus a lot on technology, on work. And also I separate our teams into 2 teams. Each team has a lead, a senior person who will manage the team, and I will mostly talk to the team leaders mainly. But still, I learned lessons over the years. I regret. I feel that I need to. It would be better if I hired more people, hire early. In that way, the business could be bigger. Maybe if the business if it were run by a more experienced person, maybe it would be bigger today. I'm not sure.
Well, it sounds like it's doing really well either way. But I mean, it sounds like if you're a value investor, then when you hire and run that business, you're also going to be looking at it in a similar way, that you got to really have a very clear value proposition for that new employee to invest in that before you'll pull that trigger and hire that person.
Yeah, I think currently our people are hardworking, and I feel good about them. They are all happy and hardworking. I treat them nicely. I really treat them sincerely. I tell them what I think, and I treat them like friends. So I never order them anything. I always talk to them, communicate with them. Treat them with sincerity. That's the most important thing to me. Sometimes maybe I'm not doing very well due to I'm not very experienced in leading, maybe, but if I treat them sincerely, they can feel it. They appreciate that.
And the kind of people you're hiring, are these all, like investment gurus themselves, or are these more like, scientists like you were?
We have 3 kinds of people. First kind is web software engineers. They have to develop websites and maintain the website features. Second are the editorial part, because we publish lots of interviews. We publish articles. We have lots of freelance writers. We have an editorial team who manage all the submitted articles. Sometimes they also do interviews with gurus. And we also have a team, I call it data team, who manage our data and communicate with our data source to collect the data we need, and sometimes make calculations and corrections, fix bugs. That's the 3 main teams we have.
All right, in 15 seconds, should I invest in mutual funds or just direct stocks?
Mostly, I think you should invest in index funds. If you don't have time to research, average investors should invest in index funds. That's also what Warren Buffett said. His wife will do it if he's dead.
Okay. Well, Charlie, thank you so much for your time today and sharing with us. It's Charlie Tian with GuruFocus.com. The book is Invest Like a Guru. It can be found on Amazon.
Yes, anywhere.
And if you want to know more about the show, please go to nextlevelshow.com or look up The Next Level Show wherever you get your podcasts. And we'll be back next week with another great guest.
Have a great week.
You have been listening to The Next Level, Conversations That Propel Business with Stephen Nooner and Bob Gibbons. Join us every Tuesday at 1:30 p.m. for more prolific conversations that will take your business to the next level.